Hi, my name is Alex Carlucci with Gustin Show Associates at Loan Cabin. I'm going to talk to you about a non-QM loan first and tell you how and why you want to get into it, and then how to get yourself out of it. So, what a non-QM loan is, it's not a typical FHA conventional Freddie Mac VA type of loan. It's very forgiving. So if you had a foreclosure in the last 2 years, FHA won't do your loan unless you have extenuating circumstances, and conventional won't do it at all. And you got to wait 7 years on conventional. FHA, you have to wait 3. So let's say you had a foreclosure 2 years ago, but you really want to buy a house. Well, they're going to ask you for 10% down. Very rarely is 5% qualified. You need a really good credit score, but 10% down is usually the sweet spot. And sometimes you need more if you got a low credit score, but they'll let you do 1 day out of a foreclosure. So you're like, oh my gosh, I got to pay 8% because the rates are very high, 9%, 7%, they're all over the place. So you're gonna get this really high percent. You're like, oh my gosh, I don't want to do this loan. It's such a ripoff. But let me explain something to you. If you're buying an owner-occupied house, non-QM, with 10% down, and your rate's gonna be 8%, let's say. Well, compared to a conventional or FHA, there's no mortgage insurance on non-QM, so it's not as bad as it seems. So it's a lot less dramatic on the payment as you would think with that higher rate. So let's say your payment's going to be $350 more a month than versus going FHA or conventional. You're like, okay, $350 a month. I had a foreclosure 2 years ago, $350 a month. Oh my goodness! So I'm going to pay $350 times 10. Times 12 months. That's like $4 grand. Times 30 years. That's 120 grand more I'm going to pay on my mortgage payment. No, you're not. What you're going to do is you're going to be in that non-QM loan for 1 year. And after that 1 year, you're going to be FHA eligible because 3-year waiting period for foreclosure. So you're only going to pay about $4 grand difference. And you're going to pay $4 grand for that 1 year over what you would have paid for the FHA, and you're going to refinance into an FHA loan 1 year later. And the good news about owner-occupied non-QM loans is they don't come with prepayment penalties. A prepayment penalty is, for these non-QMs, is typically 2% of the loan amount. So prepayment penalties only exist on non-QM loans if it's an investment property. So if you buy a house investment with non-QM and you refinance out of it to a conventional because the rate's better, you're going to have to pay 2 percentage points of the loan amount. So if your loan amount's $300,000, you're going to have to pay $6 grand to refinance into, like, let's say, a conventional loan or an FHA loan. So you can't refinance an investment property into an FHA unless you convert it to owner-occupied, by the way. So if you do want to buy a house non-QM owner-occupied, you can refinance out of it without any penalties. If let's say you're 2.5 years into your short sale or foreclosure, you're only in it for 6 months, so you're only going to pay like $2 grand extra. So you get to buy your dream home. You found it. You think property values are going to go up. You're going to pay $2 grand to get the house now, refinance it in 6 months into a regular FHA loan. It's a great product. I recommend you guys use these non-QM loans. They're not as bad as they seem. So when someone says 8%, don't run to the hills. It's not that bad. Have your loan officer price it out and compare it to a regular loan with mortgage insurance versus this without mortgage insurance, and then know that you can get out of it in 6 months, a year and a half, whatever your date is that you're trying to get away from. Because they'll also do mortgage lates in the last 12 months. So if your 12-month period is 3 or 4 months down the road, in 6 months you refinance out of it because you want to be 12 months clean on your mortgage to get out of a non-QM loan. And FHA will do 12 months clean usually. So if you're just trying to get your house and then refinance out of it, that's how you utilize non-QM. All right. If you like this video, please like it. If you have any questions, leave the questions below. We'll get back to you. Thank you.